Well, hello and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new week and a very busy one at that, given the fact that we will have a whole host of economic data, both domestically and abroad, to digest, as well as, the earnings season will be kicking off this week as well. And of course, lots of stocks in focus today, including Reliance Industries, IOC, SpiceJet, and a whole host of other counters. We will be putting the spotlight on those. And of course, we will also be getting you all your stock-related queries answered by our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street posts a weekly loss after a choppy session on Friday. Fears of the Fed restarting rate hikes take center stage following June jobs report, which reflects the US labor market remains tight. All eyes now on the June inflation data due later this week. Asian markets kickstart a new week on a mixed note, while the GIFT Nifty is indicating a slightly lower start for the Indian market. Chinese consumer prices unchanged in June, while producer prices also come in weaker than expected. Oil prices rise about 3% on Friday to hit a 9-week high. Brent settles at over $78 a barrel as supply concerns outweigh fears that rate hikes could slow economic growth. Reliance will reduce share capital in Reliance Retail and make the subsidiary fully promoter-owned by paying shareholders 1,362 rupees a share. Meanwhile, 20th July has been fixed as record date for the demerger of financial services arm Reliance Strategic Investments, which will be renamed as Jio Financial Services post-listing. Zee Entertainment will be in focus today with the Securities Appellate Tribunal set to deliver its order on Subhash Chandra and Puneet Goenka's appeal against the SEBI. Remember, the tribunal has restrained both of them from holding directorship or key managerial positions in listed entities on account of alleged fund diversion at Zee Entertainment. And we also put the spotlight on stocks like Tata Motors, Zydus, IOC, SpiceJet, among others. Well, let's bring on board then our technical expert for today, Rajesh Palviya of Axis Securities, is joining in this morning. Good morning, Rajesh. We saw a cool-off coming in on the markets, after hitting a fresh high on Friday morning. Would you expect the Nifty to now head lower and maybe take support around that 19,300 level in today's session?
Good morning, Nandita. So, yes, there was some profit taking at high level in the market, but still, if we analyze the overall setup for the market, both indices are in a bullish trajectory only. Looking at the data setup, 19,300, 19,200 are having a major put concentration, which are likely to act as an immediate support area for Nifty at the current juncture. If we breaks below 19,200, then some significant profit booking we can expect in market, and then possibly Nifty can show furthermore, downtick from the current level. But looking at the data setup, we don't expect that further major corrective action from here onward. Overall, market breadth has improved. Fund buying is continuously happening since last couple of weeks, and mid-cap, small-cap space is also showing good traction since last couple of weeks. So overall, if we analyze the setup, and macro data setup is also in favor of market. So overall, if we analyze the setup for market, it's on the bullish side, and buy on dip should be your strategy. Looking at the setup, yes, 19,300, 19,200 are the key level to watch for in the near-term basis. If we hold those levels, then one should remain on the buying side. On the high side, 19,350, 19,550 are the key resistance area for Nifty at the current juncture. If we are able to cross above 19,550 level, then this really can accelerate, and possibly Nifty can move further higher towards 19,800, even 20,000 level in the coming weeks. So overall setup is on the bullish side. Even on the Bank Nifty front also, we are holding the major support area of 44,700, which is very important support area for Bank Nifty. If he continues to hold above these levels, then possibly we may see again, buying interest to come in the Bank Nifty also. And once Bank Nifty manages to cross above 44,200, then this really can extend towards 44,600 to 44,800. So both indices are in the bullish territory, and buy or dip should be your strategy for Nifty and Bank Nifty.
All right, buy on dip should be the strategy on both the Nifty and Bank Nifty, and those are the levels to watch out for on the index today. But let's talk about the stock of the day, Reliance Industries. Couple of news flow, around this counter, given the fact that the company has announced 20th July as the record date for the demerger of its financial services arm. In fact, in another development, the company will be buying out minority shareholders at the price of 1,362 rupees per share. Now, Reliance Industries has in fact started participating in the rally and has been among the top contributors of the last 5 sessions or thereabouts. If you look at the stock, it has gained somewhere around 2% or thereabouts in the last 5 sessions. Do you expect the kind of news flow that's there around the counter to, kind of provide a boost in today's session and, maybe this stock could emerge as one of the top gainers on the Nifty today?
So clearly, Nandita, if we analyze the Reliance setup, stock is still far from its all-time high trajectory, though market is enjoying all-time high trajectory, but Reliance is still almost 8 to 10% is far from its all-time high trajectory. But looking at the data setup since last couple of weeks, we have witnessed, a lot of consolidation action as well as buying interest was there in the stock prices. Stock has formed a base at around 2,500 level in the near-term basis. Looking at the data setup, yes, we do expect, this upward momentum can continue further higher, and 2720 to 2740 is the immediate target which we are projecting for Reliance in the near-term basis. If Reliance manages to cross about 2740, then possibly Reliance can move further higher to scale up to new all-time high trajectory also. Because now what we are seeing in the market, most of the old economy stocks are now contributing to this upward momentum of market, and we expect that further more upside in the market will be supported by most of the old economy stocks. So Reliance is the one stock where we are bullish, and we expect 2740 is the near-term target for stock. One can buy and keep a stop loss of 2570.
All right, that's the view on Reliance Industries then. But hold that thought, Rajesh. I'll also bring on board, our next guest for today, Ajay Srivastava of Dimensions Corporate is joining in this morning. Good morning, Ajay. Good to have you on the show.
Good morning.
We've had a very great run on the Nifty, given the fact that we've clocked in a fresh record high of 19,500. When you look at somebody who would want to enter into the market, would you advise investors to now wait it out a bit, given the fact that we saw a cool off coming in on Friday's session? Should one wait for another 400 to 500 point dip on the Nifty to get in, or would you say this is the time to actually go all into the markets?
Good morning. I think I'll ask you the same question, that if you were wanting to put your money at risk in the market, would you risk your money at these levels in the market? Not because the levels are what they are. That's irrelevant. I think, yes, there is huge buying of FIs. But the question is at what point of time the fundamentals start to catch up with it. This rally has all been about PE expansion. It's not been about earnings. Nobody expecting earnings to go up in this country by the company that we got. It's all about PE expansion. It's all about FI buying. The question is, when you buy at these prices, would you get an adequate risk-adjusted return on your capital? The answer perhaps may be quite no at this point of time in terms of the fundamental words. Yes, FIs are buying, but FIs are bought, and people have bought a lot of old economy stocks in the world. People have booked losses all over the country. You're seeing what's happening, the write-off of the various investments big firms have done over the world. So I would say, if you are a risk, adjusted return basis investor, why would you want to put your money at risk at these levels of this? Yes, there is momentum. Yes, there is FI buying. But would you be the lucky one to buy into a PE expansion of this magnitude? And some of the Indian stocks are just nuts, absolutely. P's of 100, 80, 70s. You just name it, it's all over the place. I would simply say, wait, keep your powder dry. There will be time to buy. And that's a really good time to pick up, buy, and make returns out of it. Would you make a 20% return on this level? I doubt it very much at the end of the year. So don't do what you do today in a hurry. Relax. If you already invested, enjoy the ride and see where you can book your profit. But big commitment of money, we are not recommending to a customer at this point of time at these levels in the Indian economy.
All right, keep your powder dry is the call from Ajay. Ajay, since you mentioned earnings, of course, we will see IT heavyweights kick off the earnings season on Wednesday. In fact, TCS will be reporting its earnings. There are no great expectations regarding the earnings of these IT heavyweights, given the fact that there has been a scale off, scale down in consumer spends, and Street is expecting a very weakish first half for some of these IT majors. But do you think much of it is already in the price? But I also want to point out that some of these companies have seen a good recovery from what we saw after they reported their fourth quarter earnings. But would you say that would be the right time to actually buy into IT stocks and wait for some of the weakness to ebb, because the second half is expected to be good for some of these IT companies?
See, I do not know second half will be good or bad, because that's not the news we are getting from any of the IT companies at this point of time. They're saying the deal flow is, even. It's not something which is great. You're not losing customers. There's no attrition this far, but I think they're adding customers is a bit of a problem today. So growth is a problem. Yes, customer losses are being stemmed and projects are being extended. IT is one sector where we recommend to all investors that every time there's a big correction, keep buying in IT at this point of time, because you don't never know what's a market bottom. You never know. But these companies are good companies. These companies are strong cash flow driven companies. These companies have got global monopolies. There's very few Indian companies who are number 3, number 4 globally in the world at this point of time. This is one sector, and you can't run away from the fact that IT is required. Yes, AI will come in. Yes, there will be a lot of dislocation. But the key factor is the biggest raw material for these companies is people cost. And I think that is where the control has come in. So you may find that the volume expansion may be restricted in these companies in the next 1 year, but you will find, in my view, EBITDA margin expansion is going to come through this company. So unlike the rest of the Indian basket, where we are going to see a contraction in margins in all consumer companies, you might even see degrowth in India. Here in IT companies, you might see the reverse, that volume may be a little bit sluggish, but margins are higher because now they got real control over the people cost. So people cost, which were going haywire in the 2 years, has now come under control. Attrition is down. People are moving less in the IT companies. So one would tend to believe a wager on these companies to say they will see a EBITDA expansion faster than they will see a volume expansion.
All right, buy on divs is the view coming in from Ajay when it comes to these IT giants. Let's talk about autos as well. Tata Motors has literally turned the corner, given the fact that, the recent data coming out of, the JLR sales were pretty encouraging, and we did see a reaction coming in on the stock on Friday as well. Of course, analysts believe that, good times lie ahead for the automaker. In fact, it may be on track to turn net zero debt this fiscal itself. But what's your view? How does it stack up versus its peers like Maruti at the juncture? How would you play Tata Motors now?
See, Tata Motors should never be viewed as a domestic stock at the end of the day, because they also said they'll keep domestic business. It's a global stock at the end of the day. So one would not tend to make them appear as a Maruti or a Mahindra, etc. To part extent, yes, the domestic sales are pretty good. They've gone in the market. But let's examine what's happened globally. Globally, the product line, more than anything, their product line is very strong at this point of time. The cars are doing strong. The Land Rover is doing strong. The Defender is doing very strong. And I think that's where the traction is, because there is premium on their products in the market, in the the SUVs and the upper end SUVs at this point of time. They have a very good run for the time being in the market because their products are doing well in the market. I would not equate them with domestic Indian market, which is sluggish to say the least. Yes, certain models are flying off, but you suddenly saw Thar had a booking of 2 lakh or 3 lakh, and then it disappears, and then discounts appear on this one. So I am not too sanguine on what's happening inside Indian domestic market, because a lot is said about long waiting queues, but when you're 6 months down the line, you see the queues have disappeared at the end of the day. I would tend to bifurcate and say, please do not evaluate Tata Motors as an Indian story. It's a global story of a global brand, and that is where the traction would come from. Indian stories would, I think, see muted demand, expensive stocks at this point of time, whether you talk of the biggest one with with the tractors, whether you got autos. I think they are overcooked as a story for the time being. Sure, you can buy it. Sure, the prices can go up. Nobody argues with the market. But whether the fundamentals go with it, I doubt it very much, given what's happening to the economy today, what's happening to the flood situation, the demand, the dislocation, the inflation put together. I don't see demand in the market. I've traveled a lot in the last 30 days globally in India. There is no demand in the system of consumer products in this country. And I sometimes wonder is the disconnect in my mind, or is it the real disconnect that fundamentally what's happening on the ground in these companies is so different than what the stock market tells you? I would be keeping out of these companies in domestic stories for the time being because demand is poor. Tata Motors is a global story evaluated from a global perspective of a top quality brand. And I think those SUVs are really doing wonders in the global markets.
Right, that's the view that, you spoke about how there is no demand on ground. So would you say that manufacturing is one pocket that would emerge as the next big theme, given the fact that, there is a capex push by the government as we enter into an election year? There's been some very good big ticket defense deals as well. So would you look at some of these manufacturing names now as emerging as a big theme going forward?
You spoke about different deals. You just saw the IPO done just now, right? You saw the valuation of the company post the IPO. Okay. I think in a very, very state of inebriated exuberance, one would not even buy that at that prices, but people are buying, people are investing at those prices. One can't argue with it. So, whether it is defense companies, which are primarily PSU companies, very small 2-3 Indian companies are there in the market. Look at the valuation of those companies. It's just incredible. Yeah, sure, you can keep buying it. Sure, you can keep holding it. But is this valuation justified? So I don't think there is a story out there in manufacturing, because what are the valuation at which you are investing in these companies? It's called specialty companies, chemical companies, astronomical valuation, and you saw the correction which happened. So, and you've seen a multiplex story, how it unfolded. The valuation became incredibly crazy. And today, if you had bought the PVR Inox at 18, 1900 or 2000, today you'll be ruining the fact that the market is high and you are seeing a story. So question is not about whether sector will do well or not. Question is, in our conversation is, are you buying at the right price in this market? Is this pricing fundamentally good vis-a-vis what is expected of these industries? And certainly manufacturing cannot do much better than what it's doing today, because India is going to grow 6.5%, at best 7% estimate. Global growth is whatever it is at this point of time. So who is the buyer of these products? And infrastructure story of government is good. There's no doubt about it. But the fact is that money is being spent on things like roads in places where the traffic density is almost zero. Come to Delhi, I don't know where you are from, but come to Gurugram. The roads are collapsed absolutely. Come from the Delhi airport and you can't enter your house for an hour or so compared to any global airport. So infrastructure multiplier will come if it is spent in the right place. In our view, yes, it's a good story. Big highways are built in all places. But where is the multiplier? Because the urban infrastructure is where the constraint is. So my personal view is 6.5% economy at these valuation of manufacturing companies. I do not see a connect to buy at this point of time. If they're much cheaper, yes, not at these rates at this point of time. As I said, I would wait it out. Yes, there could be an increase in share price. But as Warren Buffett says, avoid losses more than go for returns.
All right, avoid losses and then go for returns. Well, with that, Ajay, thanks a lot for taking out time.
Thank you very much. You have a good day.
You have a good day as well. Well, with that, let's go back to Rajesh and talk about specific stocks. Rajesh, what's your call on SpiceJet? The board will be meeting on the 12th of July to consider fresh fundraise. How should one look at SpiceJet now? Do you think some bit of boost will come in against the backdrop of this bit of news?
No, as such, nothing there on SpiceJet technical structure. Stock is in weak zone, series of lower top, lower bottom formation on the daily, weekly, monthly time frame. So as such, we don't see any kind of major upward momentum from current level. Stock is almost trading near to its previous swing low, and it's trading near to its critical support area of 20, 28, 29. If it breaks below those levels, then furthermore downside we can expect in the stock prices. But if any pullback comes based on the news flow, then 35, 36 are the key supply zone again on the near-term chart. So if anybody has bought at the lower price, one should try to exit in the pullback if it comes near to 36 zone.
That's the call on SpiceJet. But let's take up some viewer queries that are trickling in this morning. Satya CK wants to know whether it's a good time to enter into a Redington at current levels. Stock was down somewhere around, I think, 2.5% on Friday. It's just coming off its 52-week highs. Would you advise investors to buy into this on any pullback?
So definitely, Redington is trading in up-sloping channel on the weekly chart. Yes, there was some profit taking in the previous session, but still, if we analyze the near-term, short-term setup, stock is trading above to all its important moving averages. So yes, we expect that, if stocks comes near to 185, 184 zone, again, some buying interest will again come in the stock prices, and then possibly some upward momentum we can see from those levels. So if you've already bought or if you want to buy the stock, keep your stop losses at around 178. You can buy in the decline towards 185. On the breakout above 195, 198, stock may scale up to the level of 210 to 220. So overall structure is positive. Buy and dip should be your strategy. 178 should be your stop loss.
All right, hope that answers your query. Let's take up another query. This one is coming in on Tech Mahindra. Dilip Kumar wants to know your thoughts on Tech Mahindra. He can hold for 1 month. If you look at the stock, just about shy of 52-week highs. In fact, I think it hit its 52-week high on Friday, and over the last 1 month, the stock is up 8% or thereabouts. Given the fact that we are at the threshold of the first quarter earnings season, and obviously earnings are not really panning out as per the investor expectations. How would you advise investors to look at Tech Mahindra at this juncture?
So stock is almost trading near to its multiple supply zones since last 8-9 months. The stock is struggling to cross 1160, 1170 zone on the weekly closing basis. Again, we are entering into the earnings season. Most of the IT stocks, large cap IT stocks, are going to deliver their number from current week onward. So if anything comes on the positive side, then there is a high possibility that stock may manage to give breakout above its multiple supply zone. So once stock manages to cross over 1175, 1180 zone, then this really can extend towards 1240 to 1260 in the near term basis. On the other hand, if it's any corrective action comes, then possibly 1100 is likely to act as a good support area in the near term basis. So earning is the major trigger to watch for most of the IT stocks, and most of the IT stocks are almost trading near to their immediate supply zone. So results are going to be the major trigger in the near term for IT stocks. So one should keep eye on how the earnings comes for IT stocks and what kind of guidance they are going to deliver in their quarterly number. So 1100 is the key level on the downside. 1240, 1260 could be the possible target if anything comes on the positive side from the earnings.
All right, of course, earnings to be the next big trigger for some of these IT giants. Let's take up a query on Titan then. Harsha Bhagra wants to know your thoughts. Of course, Titan has given out a strong business update for the first quarter, 20% growth expected, and it was one of the top gainers on Friday. In fact, it did hit a fresh 52-week high as well. But this morning, we have a downgrade coming in on the stock from Morgan Stanley. The target price of 3,207 rupees or thereabouts. Morgan Stanley believes that the risk reward is fairly balanced at the current market price. So if one were to look at Titan, how should one look at it now?
So if you're a long-term investor, there is no as a second thought to hold the stock, because it's a wealth creator stock over a period of time. So there is nothing to worry if you're a long-term investor. Yes, maybe in near term, some profit taking can be there. Stock can correct. But still, if we see the prices of Titan, it's overall in uptrend. And looking at the near-term, short-term setup, if stocks comes near to 3100, 3080 level, it's again buying opportunity in the near-term setup also. Keep your stop loss of 3050 to buy this stock in the decline. On the higher side, 3200 is the key level. If it stocks crosses those levels, then upward journey is going to continue further higher, and possibly 3450, 3500 could be the short to medium term target for Titan. So overall setup is bullish across all time frame. Stock is enjoying its bullish trajectory. So buy on dip should be your strategy in Titan.
All right, that's buy on dips should be your strategy on Titan. Let's take up a query on IOC. This one is coming in from Puneet. The IOC board has approved a fundraise of 22,000 crore rupees via rights issue. This after BPCL got a board nod for 18,000 crore rupee fundraise via rights issue. Now IOC will also be forming a 50-50 JV with Sun Mobility Singapore. Given the fact that some of these oil marketing companies have seen a very good rally coming in recently, would you advise investors to book some profit at the current juncture, or how should one look at it now?
So if you analyze the short to medium term setup, stock managed to give breakout of its November 2021 swing high, which clearly shows that stock may continue furthermore upside from the current level. Yes, one should keep a stop loss of 95 rupees. If it's not breaks below those level, one should remain invested. Looking at the short term, medium term setup, we expect this rally can extend. 105, 110 could be the immediate target on the stock prices. So 95 should be your stop trailing stop loss. Hold your positions.
All right, that's the call on IOC. I'm afraid with that we are running out of time, so that wraps up our query segment for today. But Rajesh, before I let you go, any stock recommendations for viewers this morning?
So first stock is from pharma space, that is Glenmark. Stock has shown good buying interest in the last week also, and looking at the overall setup for Glenmark, we expect this rally can extend towards 720, 730. So Glenmark is buy with stop loss of 678. Another stock is from automobile space. Most of the auto stocks are doing good. And looking at the TVS Motor setup, we expect that in current week TVS Motor can show some bullish momentum, and possibly we can expect target of 1370, 1380. Keep your stop loss of 1300. And third stock is from banking and financial, and PSU from PSU Bank. We like Bank of Baroda. Overall structure is bullish. Stock managed to give breakout on the daily, weekly time frame. So looking at the breakout, we expect Bank of Baroda can exhibit furthermore upside. 223, 225 is the near term target. Keep stop loss of 203.
All right, so all those stocks from Rajesh's radar for our viewers this morning. With that, Rajesh, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. With that, some bit of news from the primary markets. It's a busy week given the fact that we will see quite a few listings and IPOs opening up this week. But for today, Cyient DLM will be making its D-Street debut. In fact, the IPO had garnered very strong response from QIBs, and overall the IPO was subscribed somewhere around 67 times. So this is one new listing that you have to watch out for today. We'll have to see whether after Idea Forge's dream debut, whether this counter also manages to rake in a good premium as it kickstarts trade today. And of course, in other news, NSDL has also filed papers for its IPO with the SEBI, and the likes of HDFC Bank, IDBI Bank will be looking to pair stake via this public issue. Well, with that, we've come to the end of this edition of Morning Trade. From the entire team of the Morning Trade, thanks a lot for tuning in. But don't go anywhere, because coming up next is Opening Bell.